A very good morning to you. Thank you for joining us on Business Morning. I am BC Adebayo. Let's begin with global oil prices, which rose early today, reversing overnight losses as investors shifted to risk assets and out of safe haven US dollar, which slid to more than two-year low. Brent crude futures climbed 1.1% at $45.77 a barrel, while US WTI crude futures rose 0.9% to $42.98 a barrel. Now, both benchmark contracts fell around 1% on Monday, and that was caused by worries about oil oversupply, with global demand stuck below pre-COVID levels. The weakening US dollar makes oil and other commodities priced in dollars more attractive to global buyers. The president of the African Development Bank, Mr. Akinwumi Adesina, is being sworn in today as the head of the multilateral financial institution for a second five-year term. The swearing-in ceremony, which is currently being held virtually, follows his successful re-election on Friday last week after getting 100% votes of all regional and non-regional members of the bank. Since his first election as president of the AFDB on May the 28th, 2015, the bank has impacted the lives of 335 million Africans, including 18 million people with access to electricity, 141 million people benefiting from improved agricultural technologies for food security, 15 million people benefiting from access to finance from private investments, and 101 million people provided with access to improved transport, as well as 60 million people gaining access to water and sanitation. And back in the Central Bank of Nigeria says it will grant more licenses for payment service banks, and that's a move that analysts say could discourage some potential new entrants, including telecom firms, to the digital financial services sector. In a statement released on Monday, the bank explains that telecom firms, banking agents, retail chains, and postal services could apply for licenses to become payment banks, but must set up a separate company with a minimum capital base of 5 billion naira or $13 million. The CBN has so far granted payment service bank licenses to two telecom firms, Glo Mobile and Nine Mobile, as well as Hope Payment Service Bank. And as part of efforts to ensure the prudent use of foreign exchange resources and limit over-invoicing, the Central Bank last week issued a circular removing buying agents and companies from assessing its foreign exchange window through the Form M payment scheme. Now, that measure aims to trim transfer pricing, double handling charges, and avoid transferable excess costs to Nigerians. But that announcement preceded the CBN's resumption of foreign exchange sales this week and across the value chain. But since the issuance of the circular, however, the organized private sector has reacted negatively to the policy, noting that the supply chain of over 80% of the business community has been disrupted. Well, joining us now to speak more on how this new policy affects the Nigerian business community is the Director General of the Lagos Chamber of Commerce and Industry, Mr. Muda Yusuf, who's right here with us in the studio. Good morning, Mr. Yusuf. Thanks for joining us.
Good morning. Thank you very much.
Now, just like the Manufacturing Association of Nigeria and other organized private sector bodies who have kicked against this CBN circular talking about the sale of forex to intermediaries, the LCCI has also done the same. Now, what's fueling this?
Well, it's about concerns regarding the kind of disruptions that this policy will cause. Let me say that we appreciate the efforts of the Central Bank of Nigeria in supporting the real sector of the economy through its development finance initiatives. We also appreciate the worry about the effect of abuses in the foreign exchange market, which I think is part of the reason that has resulted in this policy. But we need to caution that in an attempt to solve a problem, we don't create even much bigger problems. We are in an economy that is still struggling to find its feet. The shocks of the COVID-19 onset and challenges are still much there. Some businesses have collapsed, others are still practically on lockdown. Some are still trying to come alive. Now, this policy is going to further disrupt the system. Now, we are saying that there should be no intermediaries between importers or manufacturers and the main producers of products. And the challenge here is that majority of the players in this economy are SMEs. Over 90% of operators are SMEs. Even what we regard as large enterprises here, actually small businesses out there. And these companies don't have the capacity to place the kind of orders that the main producers or suppliers, or what they call original equipment manufacturers, will honor. So they don't have an option than to go through agents. So it is these agents that help to aggregate the demands of all these SMEs and place the order, and they buy from these agents. That is one. Secondly, these agents also provide a kind of buffer in terms of suppliers' credit. It is not all the time that the importers or the manufacturers have the cash on the table to import either raw materials or equipment. Some of these agents, intermediaries, because of the long-term relationship between them and their clients, they offer some credit. Some of them give bills of collection or credit lines of close to 6 months, after which the importers will pay them. This will not happen in a relationship between the main producer and the importers.
So are you
then we
saying
have
that
the issue of also the country risk. Right now, there are some suppliers out there. Unless you put cash on the table, they are not going to honor any payment instrument from Nigeria because of all these issues of liquidity in forex market, the chances that the remittances may not crystallize and all of that. So that creates a major problem. So if you are asking people like that to now connect directly with the original producers, it is very difficult. So it is these intermediaries that provide that kind of service. And even within the domestic economy, it's a common practice. As a small retailer, you don't walk up to a multinational company and say you want to buy supplies. They will refer you to their distributors. And they have different layers of distributors and dealers. So it's a normal practice in any business setup. So this is going to create a lot of problems. As I speak to you, many Form M transactions have been practically stagnated. They have been frozen because of this directive. Because majority of all these importers, they go through intermediaries to get their products. So it's a major issue, and at least there are indications that the CBN wants to engage on this, which is a welcome development.
So was there no engagement prior to the release of this?
There was no engagement. There was no engagement. And that is one thing that our policymakers should also learn to do a bit more. You know, this is a democracy. And the beauty of democracy is participation. It's not just about voting for people. It's also participation, so that the people can be carried along, so that you have a process, a policy formulation process that is more inclusive, so that you will not be having this back and forth on policies.
But one of the objectives of the policy, according to the CBN, is to reduce over-invoicing and cut down the transfer of costs. What do you think about this?
Well, the challenge is that, let me even relate to a dilemma that we face. The Nigeria Customs Service, over 80% of imports that comes into this country, the customs will allege that there is under-invoicing.
Why is that?
That there is underpricing. Because they want to also maximize their revenue. So there's a lot of arbitrariness in the way even the customs value some of these imports. It's an issue that will come to, you know, at a different time of forum. So while the customs, which is charged with the issue of valuation of imports, is accusing the business community of undervaluation or underpricing, the CBN, who is also relating with the same business community, is accusing the business community of over-invoicing and overpricing. So where do we stand?
So what's causing the discrepancy here?
No, well, the issue is lack of proper understanding of how this system works. And it's also because there is no framework that is very credible to manage the issue of pricing. Now, the CBN is talking about introducing a pricing verification methodology or scheme. That will create another bureaucracy. In the Nigerian Customs Service, which is principally responsible for these issues of international trade, there's a full-fledged department of valuation with all the paraphernalia, the structures, and all of it to determine the value of goods. Now, if the CBN is setting up another parallel price verification unit or department, that will create another bottleneck. And you know what bottlenecks mean? Another bureaucracy. You know what it means in our environment? Each bottleneck you create creates a lot of transparency problems. It creates rooms for extortion and all of that. And at the bottom of all of this is the fact that we need to manage our foreign exchange market properly. That is very fundamental. Because if you continue to manage foreign exchange and price administratively and allocate administratively, we continue to have this problem. We have had this kind of things in the past with some other commodities. There was a time we had this scandal with fertilizer allocation. Those who are old enough will realize or will remember. At that time, trailer loads of fertilizers were disappearing. They will load at Lagos ports, they will not get to their destination just because of pricing issue. Then a decision was taken that, okay, these trailers should be accompanied by military officers. So they were assigning military officers to go with the trucks. Both the trucks and the military officers were also disappearing. These are the challenges you face when your pricing is not right. Now, the CBN has a disposition of not allowing the market to function. And that is the root cause of all of this problem.
So have there been any prior engagements, with the CBN talking about some of these challenges that you've mentioned?
No, there has been all sorts of engagements, but again, it depends on what policy model or what approach that the CBN wants to adopt. I mean, they have talked about unconventional way of managing monetary policy and all of that. But when you are dealing with a market situation and you are attempting to suppress the market, it's like swimming against the tide. The more you try to suppress, the more complications you create, even for yourself as a regulator. Now, I'll give you an example. We complain about export proceeds. The CBN was talking about the fact that exporters are not remitting. And the exporters are saying that, how can I work in this environment with all the high cost? I get my proceeds in dollar, and you say that I should exchange it at 386 naira to the dollar. What sense does that make? When the exporter knows that the open market rate is 460, 470, there was a time it was getting to 480. That will create a compliance issue. And that is what is happening now. And when policies are not right, you drive businesses underground. You drive them under the table. You have all sorts of, funny things going on. You have all sorts of transparency issues.
Now, talking about managing the forex now, as the organized private sector groups now, are you against the exchange rate unification plans by the CBN?
We are fully in support of it. But some of these things are at variance with even that policy. The market rate is 475. You are given, I heard that they want to give the Bureau de Change now at 386. And that they have to sell at 386. Are you sure they will sell at 386? How will you monitor that? How are you going to enforce that? We should allow market to function. I'm not saying that we should just allow the naira to go haywire or the exchange rate. There is still a framework to manage it. But whatever rate we adopt or we are suggesting has to reflect the underlying fundamentals of pricing. And the underlying fundamentals are the fundamentals of supply and demand. You can't give what you don't have. Once there is scarcity, there has to be adjustment. In economics, there is what you call a price that clears the market. That's what you call equilibrium price. It clears the market. It brings sanity. players in the economy will determine how they can now manage their processes, how they can position themselves in view of the prevailing prices of the foreign exchange.
Now, if you claim that the policy is not consistent with the economic sustainability plan of government, but even the fiscal authorities are in support of the harmonized exchange rates, which the CBN is targeting.
No, we are also in support of harmonized exchange rates. What I'm saying is that some of these steps are not consistent with the harmonization. That is the truth. I just told you about the experience of exporters. Now the CBN has been intimidating the exporters that they are not remitting and that they have to remit and all of that. How would they remit if you say that you are offering them 386 naira to the dollar of their export proceeds? That is not unification. That is completely at variance with the policy of unification of the exchange rate. So as much as possible, we should allow the market to express itself. And if the CBN has the capacity to influence the market through supply, then they can inject some supply to moderate rates. But this idea of fixing rates, both for NAFEX, for I&E window, for the official window, those things are not sustainable. And they create a lot of headaches. Right now, there's no clarity, there's so much uncertainty in the forex market. People are guessing there's so much speculation. And because of all these arbitrage opportunities, there are a lot of demand pressure, which normally should not be in the market. But people are there because they want to take advantage of the differential in rates.
Now, let's talk about another of your concerns, which is the fact that the desperation of the offshore portfolio investors to, of course, exit the country. But would you agree that this is a necessary evil in an open economy like we have?
No, well, the thing is that, again, when you have a liquidity problem in the foreign exchange market, these things are natural responses of people who have resources that they want to take out of the economy. Because it affects confidence. When there is a liquidity problem, it affects confidence. And when there's a collapse of confidence, people scramble to get whatever they can get at whatever price that they can get it. That is what is happening. So we need to ensure the restoration of confidence to remove uncertainty and to improve the confidence of investors, whether they are portfolio investors, whether they are manufacturers, whether they are exporters. Confidence is key. Because if we want this economy to recover fast, in line with the economic sustainability plan of government, the confidence that investors have in the processes, in the policies, in the regulations are very critical to ensure the recovery of the economy. And this economy cannot recover unless you get investors, you position them properly to be able to invest. And they will not invest if you don't give them the confidence to invest.
Now, if the CBN does not review this policy, what do you think would happen next?
Well, it's going to create further crisis. Unfortunately, we are in an economy that is still struggling to come back from the shock of COVID. Right now, we are still, grappling with all the outcomes of the COVID problem. I mean, you see the result of the Q2 numbers, a contraction of 6.1%. We are likely to go into recession in the third quarter. So this is not the time to be having any policy that you call setback for investors. So that is why I'm hoping that the central bank will review this policy, review the policy on this third-party transaction on Form M, review the policy on export proceeds. Exporters should have free access to their export proceeds. If you really want to encourage, export diversification, and if you really want to support the inflow of remittances, remittances will not come if we are imposing a wrong rate on those who want to bring funds into the economy.
All right, we would like to thank you, Director General of the Lagos Chamber of Commerce and Industry, Mr. Muda Yusuf, for coming on the program.
Thank you very much.
Our commodities market update will be up next when we return in just a moment. Please stay with us. Welcome back. A research analyst at the financial derivatives company, Desola Sumoni, joins us now to discuss the latest burning economic issues at the domestic commodities market. Good morning, Desola. It's good to have you on the program. Now, we've seen the price of Brent crude increase to a pre-pandemic high of $46 per barrel, even though it's trading around $45 a barrel as at this morning. But bring us up to speed on the latest developments in the oil market, and where do you see prices going forward?
Thank you for that question, BC. So the oil prices are driven currently by bullish news coming from the Middle East and coming from Asia and the Middle East. First, we've seen in China strong imports from China. We have seen strong imports from strong crude imports from China. Imports for China grew by, I think, 17% in July to about 14.2 million barrels per day, and that is quite significant because China is the largest importer of crude oil globally. We also saw, positive manufacturing and non-manufacturing purchasing managers index from China, which suggests that the economy is healthy and the recovery is underway. We also saw the weaker US dollar. Last week, we saw the dollar weakening against the basket of other currencies. And yesterday, it weakened by about 25 percentage points against the basket of currencies, which simply made the import bill, the oil import bill of holders of these other currencies cheaper, and tempted them to buy some more crude oil. We also saw, the Hurricane Laura in the Gulf of Mexico caused supply disruptions that led to about 1 million barrels to be offline. And finally, in Abu Dhabi, the Abu Dhabi National Company has announced that they would cut oil production by about 30% in October. So all these factors together are why we are seeing oil prices increase. But on the downside, we have resurgence, rising coronavirus cases in key economies. We are seeing in India, we are seeing in France, we are seeing in the United Kingdom, which is also sparking concerns about a second lockdown, which has implications for oil demand growth.
Now,
So
let's talk about...
Okay.
All right, you were going to say something.
Likely to, I said these factors are likely to, cap any price increases we would record in the near term, and we expect price to trade between $43 to $46 per barrel.
All right, now let's talk about data from the Nigerian National Petroleum Corporation, which shows that the organization paid 5.348 billion naira in under recovery in June, and that's despite the fact that subsidy was officially removed earlier this year. Can you talk us through this development and what subsidy removal means for petroleum price?
I mean, in April, the federal government introduced what they call the petroleum product pricing modulation mechanism, which essentially is a mechanism that tracks developments in the global market. So when oil prices fall sharply, like we saw in March, April, the price for PMS in the domestic economy will decline as well. And when prices increases in the global economy, we expect the same in the domestic economy. And we saw that happen in March, April, when we saw sharp declines in oil prices. The price of PMS in the domestic economy also reduced, and when the price began to pick up in June, July, the prices increased. But we saw, like you said, in June, figures from the NNPC showed that they still paid about 5.4 billion naira in under recovery, and the argument put forward by the NNPC is that this is payment for stock that was bought before the price modulation mechanism was implemented, and they expect that cost would be spread over 6 months. So it's still a keenly watched issue whether subsidy has actually been removed or not. And this is very, very sensitive issue and political issue in Nigeria. But we think that this modulation mechanism is positive, and final removal or permanent removal of the subsidy is positive for Nigeria in terms of savings, government expenditure, and that Nigerians are now beginning to pay market price for oil. I think that's positive.
Now, the CBN has announced the intention to inject more liquidity into the FX market from next week. How will this affect the exchange rate at the parallel market and the price of domestic commodities?
For background, we know what happened with the sharp decline in oil prices, the sharp decline in foreign capital importation, sharp decline in remittances, all of those factors, and what's the word now? Trade deficits created the situation where we did not have enough foreign exchange. And in March or April, I think, the central bank stopped injecting FX into the foreign exchange markets, and that led to the parallel market rates depreciating to record lows of about $470 per barrel. Now the central bank has come and set expectations that okay, next week we are going to inject dollars into the market, about $20 million to start with. That's about $10,000 for each of around 2,000 BDCs that we have. That's about $20 million dollars at the first injection. That is positive. It's like water to parched land. It's supposed to help with the expectations, and it has already started reducing the pressure in the foreign exchange market. But that is not enough, because we still have pent up demand of about $5 to $7 billion, depending on who you ask. And with the resumption of international flights, schools are resuming, particularly here in the UK. Schools are resuming, and last year the United Kingdom issued about 60,000 student visas to Nigerians. So imagine these people that are coming back for take tuition about $15,000. That's about $90 million right there that we need to pay this period. So overall, I think the central bank is positive injection to reduce the pressure on the FX market, but it's not enough. And I think the impact on the markets will be muted because of prices are downwards.
All right. As expected, Desola, capital importation declined sharply in Nigeria as well as other oil-producing countries. How did we get here? And do you see capital importation picking up in the near term?
The culprits are, again, oil price and the pandemic. But Nigeria is not alone. The data shows that quarter on quarter, capital importation declined sharply by about 78% to about $1.3 billion, and year on year that was about 79%. But Nigeria is not alone. This same we experience capital flights across emerging market economies: India, China, Turkey, South Africa. Even the International Institute of International Finance, which is a body that tracks capital flows globally, estimated that in Q2 alone, about $90 billion left emerging market economies. So Nigeria is not alone in that. But in addition to the COVID-19 down, we also have oil prices, oil price shock, as well as exchange issues, which spooked investors and led to sharp decline in foreign capital importation. So going forward, I think we will only see a significant return of capital inflows next year when things begin to stabilize, when the economy opens up fully and economic activity goes in a full swing.
But with the GDP contraction of 6.1% in the second quarter of 2020, of course, the World Bank is forecasting that Nigeria will enter its worst recession in 40 years. How is this recession any different from what we had in 2016? And is the federal government actually doing enough to ensure a quick recovery?
They say misery loves company. So again, I'll say Nigeria is not alone in this. All over the country, all over the world, we're experiencing record recessions. We're experiencing record contractions in GDP in Q2, and more is expected in Q3. But bringing it to Nigeria, in 2016, we had an oil price shock, and delay in addressing exchange rate issues caused the exchange rate to decline sharply and had significant implications for the economy. That was simply a supply side shock. Now we're having both. We're having a supply side shock and a demand side shock, and that's the key difference. But I think in terms of response, the response of the federal government has been quick, right, compared to 2016. So we've seen quick response by the central bank. We've seen quick response by the federal government, as well as the Ministry of Finance. The central bank injected a stimulus package of about 3.5 trillion naira, and the new national economic stimulus plan is also a plan of about 2.3 trillion naira. So this injection should be able, if properly implemented, should be able to cushion some of the negative impacts of the pandemic on the Nigerian economy. And I think that if they are properly implemented, that we should sail through this contraction and should come out quickly on the other side.
Now, just before I let you go, Desola, talk us through domestic price development and where you see domestic commodities price going forward.
On domestic prices, if you look at our slides, you see that domestic prices have been relatively flat, and even though consumer demand is increasing, but prices have been relatively flat. We've seen some increases here and there in tomato, same price of tomato increase, price of flour also increase, but generally prices are flat. And going forward, we expect them to remain flat in the near term. But in the medium term, when the exchange rate pressures begin to abate, we expect it also to move into commodity prices gradually in the middle term, but not in the interim at all.
Research analyst at the Financial Derivatives Company, thanks for your time on the program this morning.
Thank you for having me.
We'll be right back in just a minute. Now let's get a review of Monday's trading activities at the Nigerian equities market with Edidiong Iwan. Good morning, Eddie. So the bulls have refused to let go of the markets, right?
Good morning, BC. You're right. You can say that again. The bulls have refused to let go. Now, those gains, made the market not only start the week on a positive note, but also end the month of August on a positive note. Now, those gains led by interest in Dangote Cement, Lafarge Wapcan 11 PLC drove the market up, although marginally, by 0.07% to 25,327.13 points. Now, I'd like to point out that drove the month-to-date gain to about 2.6%, while the year-to-date losses moderated to about 5.6%. The equity cap is currently at 13.212 trillion naira. Now, activity level was higher yesterday as volume increased by over 120% to 302.0 million units worth 2.62 billion naira, and all of that exchanged hands in 3,854 deals. Now, although activity was a lot better yesterday, the market breadth was negative as we saw 17 losers as against 12 gainers. The sectoral chart was mostly negative yesterday. The banking sector was down 0.74% as most lenders declined apart from FCMB and GT Bank. Consumer goods was also down yesterday. Industrial goods was up 0.55%. Of course, that was due to the gains on Dangote Cement, Boa Cement, and Lafarge Wapco. Insurance was down, while oil and gas was up by almost 2%. Now, that was single-handedly, raised by the 10% gain on 11 PLC. Now, looking at the NASD OTC, the unlisted securities market, that market was unchanged yesterday at 711.15 points, valued at 522.39 billion naira. The market, the activity level was also, it was not so good yesterday. We saw just about 7,560 units worth 916,689 naira in 7 deals. Well, let's talk to Kaide Oluyemi, a stockbroker at CSL Securities. Good morning, Kaide. Thank you for joining us on the program.
Hi, good morning.
So the month of August ended on a positive note. What should we be expecting from the market in the month of September?
Okay, thank you. We've seen a sluggish recovery in the market since the lows in April compared to what we've seen in global markets. That's really because aside from the impact of we're also having the FX liquidity constraints. So going into September, yesterday we saw CBN inject some liquidity to the INA, and we also saw crude oil hit about $46 per barrel. So if this trend continues, we expect that this would be supportive of the local market, particularly in terms of volumes, in terms of activity level. So though the market has been gaining marginally, the volumes have been quite thin. So with this trend continues, we should see an improvement in volumes. As far as direction is concerned, there's an MPC meeting this month, and we're also having expecting the banks, the tier 1 banks, to release their H1 numbers. So the market direction would largely hinge on how these two events pan out. But since we've been having a positive trend, I do expect that things would continue in that direction. A lot of the names are trading at significant discounts, so we should see that positive trend continue.
Well, I'm glad you mentioned the banking sector. We're still seeing declines on that counter. What would you attribute it to?
I'll say two things. I'll say that the release of the H1 numbers are still pending. That's sort of weighing on the banking sector. Also, we've seen a large institutional fund rotate out of the banking stock into some other sectors, into consumers and industrial goods. So those two events have sort of weighed on the banking sector last couple of days.
So the oil and gas counter has been unchanged for a while now until yesterday when the sector jumped by almost 2% due to the 10% gain on 11 PLC. What would you say led to that jump yesterday?
The gain in 11 PLC, I think it's an isolated event. If you look at it, it was on very thin volume. So I wouldn't say that there's much happening in that sector. The deregulation of the downstream sector is still not yet there. So there's really nothing happening per se in that space. And for the production companies, even though Brent has recovered to about 46, production volumes are still down. So not much happening for the upstream guys as well. So I'll just say that the 10% appreciation in 11 PLC yesterday is an isolated event. Nothing particularly going on there.
What's your outlook for trading today? How has the market teed off?
Right now, things are quite flat. Nothing major has happened so far. But I think that we should have a positive trading today.
We'll keep our fingers crossed and hope for a positive trading day. Thank you, Kayode, for coming on the program. Kayode Oluyemi is a stockbroker at CSL Securities. Well, we'll leave you there for now. Over to you, Bisi.
All right. Just as Kayode said, we'll hope for a positive trading day and, of course, a positive trading month. All right, we'll see what's happening at the London markets, plus the debt and currencies market in just a moment. Please stay with us. Welcome back. Now let's cross over to our London studio where Juliana Olayinka is waiting to tell us what's trending this morning. Good morning, Juliana. Welcome back from the holiday. Of course, the summer recess is over and MPs are returning to Westminster with very full inboxes. What challenges lie ahead for the government in the coming months?
Good morning, Bisi. Well, this week, I've got to tell you, Prime Minister Boris Johnson is going to have a very large in-tray. He's presiding over a deep technical recession, as well as pretty poor approval ratings if we look at the latest polls coming out of YouGov. I suppose for Prime Minister Boris Johnson, the priority this week will be making sure that the millions of pupils in England returning to school will do so safely. There have been a series of rather dramatic U-turns over the past couple of months under his watch, and even though he has an 80-seat majority in the House of Commons, I've got to tell you the backbenchers, Tory backbenchers, are not happy at all. On the one hand, they've been doing a series of media appearances across Britain, vehemently defending the government's decisions, and then 24 hours later, they've got egg on the face. Egg on the face is a colloquial term, I've got to say. So there'll be lots of talk on that. Also, as well, Brexit is still happening here in Britain. The transition period ends on December the 31st. Boris Johnson will be keen to try and strike a deal with the EU. We spoke about this yesterday, didn't we? And I believe preliminary negotiations will kick off again next week, with the hard stuff taking place a week later. So there are loads of discussions on that. And I've got to tell you, coronavirus policy, Rishi Sunak, the Chancellor of the Exchequer, will be hearing from some Conservative members who are concerned about just how this country will pay back that £300 billion deficit. There are discussions that this money could be coming from certain tax loopholes that some wealthy individuals in the UK have been enjoying. However, over the weekend, there were discussions suggesting that the 0.7% of GDP that's put towards foreign aid could become victim. But who knows? We're likely to hear from Prime Minister Boris Johnson later today, but definitely tomorrow in the House of Commons, where he will be facing the opposition Labour leader, Sir Keir Starmer.
All right, now, IAG Chief Executive Willie Walsh, who is the boss of British Airways, has warned that holidaymakers could face chaos and hardship if coronavirus quarantine measures are reintroduced for those arriving to the UK from Portugal. What's so special about Portugal?
What's so special about Portugal? Well, it depends, really. It's a pretty popular hotspot for British holidaymakers. And up until about a week ago, it was actually on Britain's quarantine list. So unlike Spain and France and the tourist destinations that were removed from it when these travel corridors opened at the beginning of August, Portugal wasn't on that list. It had been on that list, but now there are suggestions that it will go back on the quarantine list after coronavirus cases have been creeping up in the country. There appears to be a common threshold that if there are 20 cases of coronavirus in 100,000 people over 7 days, you are on that list. According to the latest data in Portugal, it's apparently 21.1. According to the Office for National Statistics in the UK, it's 12.21. So there are suggestions that it will be on there over the weekend. I believe Trinidad and Tobago, as well as Croatia and other countries, were added back onto the quarantine list, which means if you are a British holidaymaker who travels to that destination, when you come back to the UK, you have to self-isolate for 14 days. So what's so special? It's in the headlines because it's likely in the next 24 hours or so that British holidaymakers who are in there will have to self-isolate.
What direction are we likely to see the markets today? Do you expect any major drivers?
Well, it depends on what Prime Minister Boris Johnson has to say, particularly over coronavirus policy and whether or not there are any major U-turns or calls or comments on Brexit. But the FTSE 100, of course, opened a little bit stagnant today, down about 0.5%. The FTSE 250, the mid-cap index, that was up by about 0.3%. We've also got a strong sterling, that's up 0.3% against the dollar. BA owner IAG, their shares are down by 5%, and also Rolls-Royce, whose shares do rely heavily on the airline industry, they're down 0.3%. And it seems as if a lot of the markets are reacting to the news that Portugal could be indeed added back onto the UK's quarantine list.
All right, and we'll get more updates from you at 1:30. Do enjoy the rest of your day.
Thank you.
And it's back to Edidion for a review of the debt and currencies market. Over to you, Eddie.
Thank you, BC. Well, the bond market was bearish yesterday as average yields, expanded by 7 basis points. We saw buying interest on the 22nd of January 2026 counter. We had 16 deals worth 9.31 billion naira. The Nigerian Treasury bills market was also bearish yesterday as yields expanded. And although we didn't see much activity on that counter, we had just 7 deals worth 994.64 million naira. The OMO market was bullish yesterday as yields declined on that segment of the market. We saw a lot of demand on the August 2021 deal. We had 34 deals worth 52.0 billion naira. Now that is on the fixed income market. But then to talk more about the foreign exchange market is Ajibola Aero Phillips, the head FX trading at FBN Quest Merchant Bank. Good morning, Ajibola. Thank you for joining us on the program.
Good morning. Thank you for having me.
So we saw the Naira up against the dollar yesterday at the importers and exporters window. Has the Naira sustained that strengthened position in early trade today?
Yes, slightly. There's been some appreciation, and this is coming from all of the things around what CBN is doing in the market. There's been some bit of intervention, like the planned intervention in the BDC segment, and then there's been some slight intervention yesterday as well in the R&D market. So that has given some level of confidence to the Naira. Supply is still very, very much short. Demand still outweighs supplies greatly, but that has boosted the Naira slightly in the R&D market right now.
So how would you say volume of transactions have been in that space?
Still very far from where we need to be. Now we're
I mean, volumes are really, really low, and except once in a while when you get the increase, maybe about 100 million and thereabouts. But I mean, the volumes are still very, very low. At least yesterday, total volume traded was less than $20 million. I expect that it will go slightly higher this today once people begin to, do some of the trades that they closed yesterday. So yes, volume still lower than where we ought to be.
From the parallel markets, when international flights resume on the 5th of September? Hello, Ajibola, are you with me? Oh, I think we lost Ajibola there, but that's Ajibola Phillips, the head of FX trading at FBN Quest Merchant Bank. Well, we hoped he could have told us what we should be expecting from the parallel markets, but then we'll leave it there for today. Over to you, Bisi.
And we'll stay positive and always hope for a profitable trading day. And that's where we wrap it up on today's program. Thank you for watching. I am Bisi Adebayo.